Hello and welcome. This is BQ Prime. I am Agam Vakil and you're watching Trade Talk. Well, in this segment, we take you through all that, you can watch out for in today's day of trade. That would include earnings, previews, as well as several other factors, that could perhaps have some implications on markets going forward. Well, starting off with how markets traded yesterday, we did see advances coming through, a little more short covering coming along as well. And in terms of your various technical parameters, we did see the markets come off from some very crucial levels. Well, one of them, of course, including the 200-day exponential moving average. That said, in today's day of trade, when it comes to some of your futures and options cues, well, we are looking at some amount of, buying coming back. So both the index futures, the Nifty as of the Bank Nifty, have started to see an increase in open interest towards an upside move. In terms of levels that we can watch out for based on the options data in today's day of trade, once again, we're keeping an eye on a 500-point range. On the higher end, it's the 19,500 call, which has max OI, and on the lower end, as activity shifted back above the 19,000 mark, we're watching out for that as a key support level in today's day of trade. As far as the Bank Nifty is concerned, well, not much has changed. I know we have seen a little bit of short covering there as well, but in today's day of trade, we can keep an eye on 42,500. That continues to remain a firm support as we move in. Now, that's as far as your market outlay is concerned. Do remember that we had strength in global markets. Besides that, we're also watching out for the decision from Bank of Japan in terms of its monetary policy, which could perhaps have some implications on Asian markets and indirectly on India as well. But that said, let's also now shift focus to some of the earnings that we are watching out for. We have Varsha who's joining us to take us through some of them. Varsha, good morning. Thanks for joining in. Let's start by talking about some of your relatively large cap, non-index large cap earnings. What do we have for us?
Good morning. So let's start with Marico first. So if you see, the revenue was down almost 0.8% to 2,476 crore. Now, EBITDA was up almost 15%, and the Marico's second quarter profit rose in line with estimates, but revenue dipped for the second quarter marginally on account of subdued rural demand and moved to cut prices of Saffola edible oil. Now, the net profit rose almost 17% over the previous year. That compares with 357 crore consensus estimate of analysts tracked by Bloomberg. Now, while urban sentiment improved sequentially, instances of higher food inflation and uneven rainfall distribution led to lower than expected pace of recovery in rural demand. Now, next we have DLF, where revenue from operation was almost 1,348 crore during the July-September quarter, as against 1,302 crore a year ago. Now, if you see, the net sales bookings for the quarter stood at 2,228 crore. Reported profit was up 30%, but we should know that the other income jumped from 58 crore to rupees 128 crore. Right. So the net profit, 30% growth in net profit is aided by other income also. Right. Then we have TVS Motors, where revenue was up to 13% and EBITDA was up almost 22%. Now, the overall two-wheeler and three-wheeler sales, including exports, grew 5%. And the company's EV portfolios, that is TVS iQube sales, surpassed 2 lakh units.
Right. Varsha, let's move beyond some of these large cap names. You also have a couple of mid cap earnings.
Yeah. So let's start with APL Apollo Tubes then. So there was an uptick in revenue of 17%. Now, the rise in revenue was driven by 12% year-on-year growth in volumes at 6,74,761 ton. Now, company has given sales volume guidance of 2.8 to 3 million ton for FY24. If you see EBITDA was up 40%. Now, the EBITDA per ton rose 25%. Now, this was driven by 55% surge in EBITDA per ton for standard products that they have, which accounted almost 45% of overall volume, and the value-added products, which has higher EBITDA margin. So the EBITDA per ton there also rose almost 14%, aided by ramp-up in its Raipur plant. And if you see the reported profit, it was up 35% at 203 crore. Then lastly, we have Blue Star, where there was uptick in revenue of 20%. Also, EBITDA was up 43%. Now, the growth in operating profit was driven by enhanced scale and higher gross margin. Also, their carry forward order book as on September 30th grew significantly by 44%. Also, with the infusion of 1,000 crores equity from the recently concluded QIP, they intend to accelerate their growth plans.
Okay, Varsha, thank you so much for joining in and taking us through some of those earnings. Of course, Blue Star is a big surprise because it's not every day that we see a consumer company do so well. But of course, Blue Star in this case has bucked a trend. Shifting focus to, well, all the earnings that are going to come in today's day of trade. We have two very crucial nifty earnings in today's day of trade, starting off with L&T. L&T, of course, as you all know, is the largest infra player as well as a capital goods player in India in the private sector. And of course, also one of the largest order books that we can watch out for. But what can we expect from the earnings going forward? We have Vikas joining in. Vikas, good morning. What can we expect from L&T in terms of its quarterly earnings?
Yeah, hi. Good morning, Agam. Basically, L&T is expected to do extremely well this quarter compared to what it was last year when it was coming out from COVID, especially in terms of project executions. The company is expected to show a revenue growth of almost doubling its revenue growth to almost 50,600 crore. And EBITDA as well is expected to almost triple, this quarter, basically because of lowering of commodity prices and cost optimization that company has taken up. So that is also expected to treble to almost 5,600 crore this quarter. As far as gross margins are concerned or operating margins are concerned, that is expected to almost increase by 340 basis points to 10.8%. The company initially had given a guidance of company going back to pre-COVID levels by Q4 of this year, but the increase in margins has already started. So that is also something that we have to look out for, what the guidance is going to be for the full year. As far as profit is concerned, the net profit is expected to rise by close to 30%. So the company had initially said that they expect the margins to increase because of better accretive orders which are now coming up as far as the execution is concerned, which was not happening till a couple of quarters back. So that is there, as well as because of rising crude prices, we will be watching out for how the hydrocarbon sector is doing, if they have picked up orders from that. And the international orders in the previous quarter had increased to almost 42%. So that we will have to look out for if they are focusing more on international orders, especially on Middle East and also in the Southeast region, especially in the hydrocarbon sector.
Right,
Thank you,
Vikas.
Agam.
Right, Vikas. Thank you so much for joining in and taking us through what we can expect from L&T. Of course, crucial earnings to keep an eye on. And from there on, we move into the telecommunications space where we shift focus to Bharti Airtel. We have Smriti joining us to tell us about what we can expect from earnings from Bharti Airtel. Smriti.
Good morning, Agam.
Good morning.
So, Bharti Airtel is expected to post a healthy growth in terms of ARPU and even revenue on an annual basis. However, sequentially, revenue and even margins are likely to be flat. Now, this is because of delayed tariff hikes and higher selling and marketing expenses, which may contract the margins. Let's look at the numbers on a quarter-on-quarter basis. So, revenue is likely to rise only 1.75% to 38,000 crores. EBITDA to be up only 1.62% to 19,916 crore, margin flat at 52.3%, net profit double to 3,205 crore. Now, I'd like to point out that Airtel reported an exceptional loss in the last quarter on devaluation of Naira. This happened after the Central Bank of Nigeria announced changes to its foreign exchange market norms, leading to devaluation of Naira against the US dollar by about 62%.
Right, Smriti, thank you so much for taking us through what we can expect from Bharti Airtel. Of course, another crucial earnings to keep an eye on. But from there, we shift focus to Tata Consumer Products, and we have Sessa joining us to tell us a little more about that as well. Sessa, good morning.
Hi, morning, Agam. So yeah, Tata Consumer, as we know, is expected to register 11% revenue growth this quarter, with its salt business continuing on its robust growth trajectory, and there are expected signs of recovery in the tea volumes. Now, the company's growth business segments like the NourishCo, Tata Sampann, are expected to maintain their growth momentum with a higher focus on expanding its distribution network. Coming to TCPL's international business, that is also expected to see higher revenue growth and margins aided by the low base of last year, along with the flow through of price hikes that the company had taken in the previous quarters in the UK market. However, the street estimates a low demand recovery. So that is something that they will be watching out for. Now, on the operational front, the company stands to benefit from the fall in commodity prices of its key raw materials such as tea and coffee, with its margins expected to expand by around 120 basis point year on year. However, the company's higher focus on advertising and promotions can lead to some moderation in margins sequentially. Now, the street will be watching for key management commentary on the key macro environment indicators like the effect of an erratic monsoon season and the volatility in the coffee prices on demand and margin, and also the performance of each of the businesses, what the company calls as the new growth engines, such as Tata Sampann, Nourishco, Tata Soulful, and the ready-to-consume business, Tata Smart Foods.
Okay, fair enough, Sessa. Thank you so much for bringing in the expectations for Tata Consumer Products, another big FMCG company on the radar in terms of earnings for the second quarter. And from there on, we talk about all the other stocks that we need to watch out for on the back of news, and we have Hemaj joining us to take us through that list. Hemaj, good morning.
Hey, good morning, Agam. So I'll start off with a significant victory for Tata Motors first.
Right.
Arbitral proceeding against West Bengal Industrial Development Corporation has been finally disposed by a 3-member bench. And the company now is entitled to recover 766 crores plus 11% interest per annum, which would date back from September 1, 2016 onwards. Now, Tata Motors is also expected to recover costs of about 1 crore that it expended in these towards the cost of these proceedings. Now, this is significant after years of legal battle, and after Tata Motors left Singur back in 2008, the proceedings have finally come to a conclusion. And moving on towards Prism Johnson, the company's greenfield tile production plant at West Bengal starts its commercial production now, and the plant has a production capacity of 6.3 MSM per annum, and the total production for the company stands at 67 MSM per annum. Then PSP Projects has reported some significant order wins worth 200 crores across 3 various projects. The total order inflow for FY24 as of now stands at about 960 odd crores, and the company is also the lowest bidder for a Gujarat biotechnology project, which is worth 101 crores. So that gives them a lot of revenue visibility in the near future. The orders mostly are based from Ahmedabad, from various stakeholders, ranging from private projects to public municipal corporations as well. And these projects are expected to be completed in about 18 to 22 months. Then we have Bajaj Hindustan, where the company has received about 1,360 odd crores in their respective escrow accounts, maintained exclusively for cane price payment towards its 14 sugar units. Now, the amount is said to be paid to cane growers towards cane payment arrears for the previous year. And lastly, we have DCM Shriram, where the company is set to set up a plant in Loni, Uttar Pradesh, and the plant is going to increase its capacity to 9,400 TCD from 7,300. So, and this would comprise of a total investment of about 186 crores, 26 crores coming in from working capital. So again, these stocks could be, the ones to watch on these developments.
Absolutely. Of course, Tata Motors being right at the top in terms of key watchables, but you also have a couple of updates from the IPO space, Hemaj?
Right, absolutely. So Honasa Consumer launches its IPO today,
yes.
And the company, which is popularly known for their product Mama Earth, will have their issue set to close on November 2nd. The total issue size stands at about 1,700 crores, of which 365 crores is fresh issue, while the remaining is offer for sale, about 1,300 crores, both from the promoters and the other selling groups. And the company plans to use these proceeds from the fresh issue towards advertisement expenses to build a better brand presence across the country, capital expenditure for setting up new exclusive brand outlets,
right,
and also by investing in the subsidiary B Blunt. They have dedicated 26 crores towards that. However, before subscribing, some key risks to watch out for for retail investors, especially. The company has incurred losses in the past 2 of the 4 fiscal years, and about 80% of their products are manufactured from outsourcing.
Right.
So there's a key dependence on external third-party manufacturers. So these are a few things to watch out for. For more updates, I would recommend our viewers to check out IPO Adda or even tune into our website as well.
Certainly.
To learn more about that.
Fair enough. Well, thanks so much, Hemaj, for getting us those updates on the IPO. We'll be watching out for that. Besides that, of course, we've discussed a long list of all the stocks that we can watch out for. Of course, a lot of technicals to keep an eye on as well as we move into trade today. But for now, it's a conclusion on Trade Talk, but don't go anywhere. Lots more lined up. Stay tuned to BQ Prime, and we'll keep bringing you more.